All right, let's get started. Welcome everybody to the Wednesday night Multifamily Freedom Chasers Financing Zoom. My name is Shelly Miles. If you do not know me, if this is your first time on our call, just throw one in the chat so we can recognize you. If you've been here before, welcome back. This is kind of weird because he's out on the balcony and I'm in the room, and we're trying to make it work and not echo. Because when you're like really close to somebody that's doing a Zoom call, it really echoes and sounds really silly. Hopefully we're not echoing. But yeah, Jerry, go ahead and start.
Oh, go ahead and move our slides. So today's agenda, we'll go through a little bit about the Freedom Chasers and the ecosystem that has been built. We'll talk about the current debt market. I don't know if everybody knows it's on the call tonight, but they raised the rates again today, another 0.25%. The benchmark rate. Then we'll go into the main topic, which is the basics of apartment finance. Then we'll have a time at the end for some question and answer.
All right, and I just wanted to welcome Al. It's his first time here, and then we have Benjamin. This is his first time on our call, but he's been on other calls before. Welcome, guys. Thank you for joining us.
Great to have you guys.
Just wanted to let everybody know that this call is to connect. We are connecting with each other, finding partners so we can take down some apartment complexes together. So throw your information in the chat so everybody can connect with each other. All right.
So the MFC community, the newbies on here are going to hear this. The rest of you guys have heard it before. The founders over here, Marcel, Trevor, and Victor. Dr. Charles was actually part of that founding group as well. They do a call every Sunday night, and that is now at 8 o'clock. It's not the right time on here. It's 8:30 on here, but all the evening calls are now 8 o'clock, just for uniformity's sake. They call that the activation Zoom. They've had some big players in the multifamily market on those calls. Monday mornings, we got Peter St. Martin comes on at 2 p.m. and does live broker calls. So he kind of saw a need where people were afraid to make the call, afraid to make the call to maybe debt brokers or the commercial real estate brokers, and he'll actually get on there and hold your hand through the call and help you to get through that process and to kind of overcome your fears. Tuesdays, we got the napkin underwriting. You find a deal, bring it to these guys, and they'll underwrite it for you and with you on the Tuesday night Zoom, and teach you how to do it yourself as well. Then Wednesday nights, you've got me and my beautiful wife here every other Wednesday. And then the off Wednesdays, we have Victor is doing advanced underwriting. So, and all the evening calls are now at 8 o'clock. And, the Monday calls at 2. So you can find brokers that are working and available. So plug into these calls, this community, guys. People pay a lot of money to get this kind of information that you learn on these calls. So people join mentorships and all these things and spend a lot of money and time, and it's all free here. So don't take advantage of it. Join and be a part.
Give me 1 second. Let me share. Let me share the Freedom Chasers Facebook page so you guys can join that group. If you're not already on that group, you can go ahead and join it. I stopped sharing, right? You can't see.
Yeah, you're not sharing. Do you want me to get it? I got it right here.
I got it. I just gotta figure out how to get back into this thing. Okay. I don't know how to get back here. This is not good. Okay. Sorry,
All right.
guys.
I got it here. I'm sharing it now.
I know, but I can't. Okay. There we go. Sorry. Yeah, go ahead and share it.
There we go.
Get back into the Zoom. That's what it was.
Join the Freedom Chasers Facebook group if you haven't yet. All the information for everything is on there. So, who are the Mileses? Do you want to do this tonight, or you want me to do it tonight, babe?
You go ahead.
All right. So I am Jerry Miles, and that's my wife Shelly. JJ and Jordan back there are 2 sons. Our oldest Riley is also on the call here, I believe. So y'all say hey to Riley in the chat and connect with him. All 3 of the boys are go-getters and going after new stuff all the time and are hard workers. So, but my wife and I, we've actually been in the commercial roofing business for the last 20 plus years. Started quite a few years ago investing in real estate. We saw a real need in the market for someone to offer financing and funding to real estate investors and to connect real estate investors with the right funding sources and to treat them fairly. We had a few occasions, through our process where we was doing refinances and different things on properties that we just weren't treated very fairly. We're overcharged on fees, and actually had some people that in my eyes were trying to rip us off. So because of that, we joined the National Association of Commercial Loan Brokers. Went through a training program they had, and 3 years ago we started our business, Adventure Commercial Capital. And so it's our mission to help real estate investors grow their portfolios and to grow their net worths and to get bigger. So, and that's what we do. Go ahead and go to the next one there. So right here's our contact information. That right there is my cell phone number, and then our email addresses. Feel free to reach out to us if you have any needs or have any questions on deals or want to chat about anything. So we're here and we're open and ready to do business. And we'd love to do business with you. Even if we don't do business, give us a call. We'd love to chat. So.
Also, if you're in Miami right now, send us a text or an email.
Yeah, Miami or Fort Lauderdale. I'll have to show you guys again. Not everybody was on here before, but we're here for a Grant Cardone event on the 25th floor of the Diplomat here. So that's my view right now. And we checked in about an hour ago in the hotel, and now we're on Zoom. So we're ready to go. Why don't you guys tell us a little bit about yourselves?
Yeah, go ahead, raise your hand, and we'll call you up. We'll call you. Sorry, I can't speak. This is why I don't speak in public. Raise your hand, we will call you up. So if I can speak on here, anybody can speak on here. So go ahead, let's hear from somebody. We already heard from Dr. Charles. You guys can connect with him. I think he put his information in the chat. Dr. Charles, if you want to talk some more, you're more than welcome to go ahead.
Hey, I want to tell you guys on our call here that we do, we've actually had people do business with each other. I have a contractor friend here locally that met an investor on this call, and now he's doing a rehab project or I don't know if he started it yet or not, but he had looked at a rehab project and is pricing out a rehab project for somebody on an apartment building. So that was on this call. They connected here. So looks like we got Brenda.
Hey, I'm Brenda Kinney. I'm new to real estate investing, but have been doing it for a couple of months now, going through the Michael Blanc program. And then also I'm part of the Cardone Real Estate Club. So have met a ton of great people, and including you guys. I mean, I haven't officially met you, but Jerry, we talked the other day, if you remember. Yeah, I'm looking for my first deal, but just partnered up with someone who's already got a deal and is looking for co-GPs and capital raisers. So I'm going to be working on that while I'm still trying to find my own first deal. So really excited and moving forward. So
Awesome. Great to have you here, Brenda.
thank you.
Brenda, what market are you in?
I'm in Greenville, South Carolina. So
Nice.
yeah, if anybody's interested in South Carolina, North Carolina, Georgia, Tennessee, North Florida, let me know. And I met somebody else at the Cardone event a month ago or so, whenever that was. And they had a property here in Eastern South Carolina that they wanted somebody to look at. And I was boots on the ground for them. So I went out, looked at it, took some pictures, and sent it to them and helped them make the decision, whatever way they went. At least I was able to help. So happy to do that for people.
Nice.
Yeah. And again, if you're interested in investing here, let me know. Obviously have the deal I was just telling you about, but I'm looking for deals myself. So happy to partner with people. Obviously, I keep hearing people say this is a team sport, right? So
Right.
you got to partner up. So looking for partners.
That's right. Yep. Put your information in the chat. Everybody make sure you put your information in chat. Give everybody a chance to connect with you. Michelle, I think that's how you say it.
Yes, you pronounce it perfectly. Thank you. So my name is Michelle Chu. I'm based in Seattle, Washington. I am fairly new to multifamily. My focus has been single family and small scale multifamily. So I am not new to real estate investing. It's just that I've taken a long pause to take care of my personal matters and come back seeing the market being completely different. So I am now exploring whether I should do multifamily syndication full-time, because I've multiple mentors who tell me that my personality can potentially be a fit, but I am now in the exploration phase. So thank you so much. Love to meet all of you.
Great. Thank you, Michelle. And Anthony, how are you, sir?
Hello, this is Anthony Adams.
Yeah,
I was trying to type my information in there. I'll finish it in a minute.
right.
Anyway, I'm a residential loan broker, lender kind of guy. I've been doing that 30 years. And I joined the Brad Sumrock group last August, I think it is, to get some information on apartments. And so I've been being educated there. I'm interested in moving ahead. You know, this market's changing environment since the interest rates went up. My income in the mortgage business fell off, and so I went through about, well, let's see, 3 or 4 months here this year with no income from the mortgage business. So I just now am closing loans again. And so I thought what I better do is just raise some capital and keep working towards saving some more money at this point. So I held back on becoming a limited partner last year for $50,000. I was thinking about putting it in. I just kept that money back. I talked to CPA. He suggested I might be better off to be a GP. So that's what I did. In the meantime, I opened a holding company and 2 LLCs. In one of the LLCs, I am I'm building credit. And so I started about a month ago. I've got some net 30 accounts there. And Bank of America gave me 16,000 and 8,000. And today American Express approved me for 50,000. So I'm just trying to work on getting a line of credit, 50 to 100,000 at 0 interest, whatever that is. I'm joining the Gator method of lending. And that was going to be my next move. I just wanted to make more money now, make sure I don't have a cash flow problem, and then move ahead in apartments. So in the meantime, I'm getting an education on apartments, and that's where I am.
Awesome. Sounds good, man. We're all trying to grow our incomes. Benjamin, go ahead, man. And then we'll get started with our current debt market.
Thank you.
Okay.
Thanks, Anthony.
Yep, thank you.
Hello, this is Ben Johnson from Atlanta, Georgia. I'm a native of Atlanta. I still live here with my wife and son. And like your previous speaker, I'm in this Brad Sumrock group. And we recently had Marcel come to our Atlanta meetup to speak 1 week ago this past Friday. So he was great, by the way. And so I decided I would join more of the Freedom Chaser Zoom calls when the time permits. So appreciate you having this one this evening. And I did hear one of the ladies say she was interested in Georgia as well. So our meetup is actually going to do a virtual event next month, and I'll send that information out. So if anyone wants to join, they can join on there.
Awesome, Benjamin.
All right.
Glad to have you here.
Great
Thanks.
to have you.
Yeah.
Glad you can join tonight.
Thank you.
All right, Jerry, do you want to move on?
All righty. All right. So first thing we'll talk about, just kind of a current market update. So we have, first, where are the rates, the current rates? The Fed raised the benchmark rate, 5 to 5.25 today. They're still talking about inflation and worried about inflation and all these things. I mean, I'm hearing people saying that we might have a couple more months of rates going up. Who knows? Who knows what they're going to do? What's going to happen as far as that goes? I know that today, in a lot of ways, the market is stagnant. We've had quite a few deals here recently that are starting in the process, and then just an example, we had one that came in, and our Freddie and Fannie underwriters came back with taxes that were $140,000 more per year than what they had planned in their pro forma and what the previous owner was paying. So more than just interest rates, there's things being thrown into the market that are kind of hurting the buying and selling and getting deals done. With raising rates, we have also the inflation making insurance go up, and work is getting more expensive to get done. Materials are more expensive. So we have a lot of things going on in the market, and in a lot of ways, there's just not a lot happening as far as buying and selling. There's a lot of buyers that are ready to buy, I believe. Some of the big guys have kind of stopped buying. But then we have sellers that are still trying to hold on to what they were, what they would have gotten last year if they was to sell. So it's kind of a weird market. We've got things sitting on the market longer, and then we have some things that are still flying off the market like it was 9 months ago. We were coming down here to Florida and got a call from Riley, our oldest son, and he had was trying to buy a duplex in our local area in Northern Kentucky, and I forget how many offers. I think it was like more than 10 offers of cash offers on the property that were $50,000 over asking price. So we still have kind of that stuff going on in the market, but at the same time, in a lot of ways with the bigger apartments and things, it's kind of stagnant. So SOFR rate is You know, right now we're at 4.8. A lot of our bridge guys, go off of SOFR. They'll be sometimes 4 points over SOFR, 5 points over SOFR. And a lot of them are getting nervous about locking in rates right now. So they'll come in on the deal and say, hey, we're going to be 4.25 over SOFR at the time of closing. And so, in some ways, you really can't make a deal work like that with the way interest rates are moving up and down every day. So, one good thing that's still going on in the market. I mean, the treasuries overall have been down. 10-year treasury today was at 3.4. When you're looking at the treasury rate, that's what we base. If I'm looking at an apartment building and figure an agency debt, I'm going to look at the 10-year treasury. And if you want to do a quick napkin underwriting, do the 10-year treasury, add 2.25 to it, 2.25 points, and that'll get you a good ballpark for where your rates will be if you're trying to underwrite a deal. So go ahead and move the slide. So if you've been on the calls, over the last few months, we still have this up. Freddie and Fannie have not lent out the money that they need to lend out. They didn't finish last year. They didn't finish lending out the money they had set aside to lend out. And now this year they're behind schedule again. They're a mission-driven organization. And they're here to, help apartment owners be able to provide affordable housing. And so they're given a certain amount of money to lend out, and they're getting more aggressive on deals, but they can't compromise. They can't compromise their underwriting, and they're looking at the deals the way they look at them. They're still going to need to have the DSCRs. They're still going to need to, qualify the properties, qualify the sponsors, but they are getting more aggressive and want to lend on products. So you guys go to the next one. So our topic for tonight, the basics of apartment financing, and some of you guys, this might just be really, really basic. And others it might not be. But if you have questions here when I get done, I would love to hear any of them. And there's no stupid questions. So just a couple ways, apartment loans are different from residential mortgages. When you're going to get a residential mortgage, they're going to look at your debt to income ratio. All right, they're going to look at the income you make, and they're going to look at any other debts you have, and then they're going to base what you're able to borrow on a mortgage on your personal income. When we're looking at apartments, everything in business finance and commercial real estate is based on DSCR, their debt service coverage ratio. So our next Zoom, we're going to be talking about the ins and outs of DSCR. What is it? How do you get to those numbers and all that? But they look at the DSCR, and they want to see that if all the bills for the property, taxes, insurance, mortgage, everything else is $100, they're going to want to see you making $120. So they want to see a 1.2 or better in most cases. So, lenders, when we're looking at commercial real estate, they're going to qualify the property first, and then the borrower second. Residentially, they're going to do kind of the opposite. They're going to qualify the borrower first, and then the property second. Apartment loans, generally you're going to need a much larger, down payment. 20%, and in today's market, I've seen 50% on occasion. And that being opposed to a lot of residential programs, where you get away with sometimes 3, 5, 10, rare occasions, 20% down on residential mortgages. So go ahead and hit the slide. So how to qualify, cash flow, for the property, annual net operating income must cover the yearly mortgage. The payments, your income must be 1.2 times greater than than your mortgage payment. So, all right, your income needs to be 1.2 times higher than your mortgage payment. So I kind of wrote that for you, or also known as debt coverage ratio. So collateral, the property being purchased at the appraised value, as well as a large enough down payment so that the loan to value is 75% or lower. And we can actually go to 80% on some agency products. Credit scores 660 or better. This is for personal. No bankruptcies in the last 7 years. No short sales or foreclosures in the last 3 years. No open judgments. And then you need to have some liquidity and cash in the bank. And we have net worth requirements on a lot of commercial real estate. Generally, when you're looking at properties and your loans are going to be more than $1 million, you're going to need to have a net worth equal to or greater than the loan amount. So go ahead and go to the next one. What lenders like and what they dislike. They like solid cash flow. A good price, of course. Evidence of good operational history, 2 to 3 years of back records, proving the property has already been making money. On some occasions, if you have a property that is showing, that you've redone and that you've brought up a little bit, maybe the previous owner is just now starting to get serious, or they bought it to get it ready to resell and it was in a bad shape, and then they're bringing it up. Sometimes we can go off a T3 or a trailing 3, like the last 3 months we can go off of if you have a good income and good occupancy and all those things. And something else I didn't put in there that lenders like is high population areas. They like a lot of people in the area and they like a lot of jobs. So metropolitan areas, love them or hate them. The banks love them. The banks love them because generally there's multiple ways of people earning income. And that's your tenant base. So if you have a military town, that's the only thing in town, or you have like kind of a smaller town that has one employer. Banks don't like those types of deals. So that one town or that military base may move something out of there and you lose your tenant base, or that business might move and you lose your tenant base. They like great big areas that are growing and have a lot of different options for people. So things they dislike: poor financial records, poorly maintained properties. And I will say, poorly maintained properties, generally we're going to need to have a larger down payment on those properties. They're going to give you less leverage, and then they're also going to really need to see some experience in kind of mitigating the problems that are there in the property. They're going to want to see that you've got experience, bringing properties back to life, or doing large rehab projects and things like that. And lenders also like a weak market. Kind of poverty stricken areas, they don't like them as well, and low population areas. So, and we've been drug into that ourselves when we were brand new investors. We would find a property that was, 20 or 30,000 and we'd buy it and we'd say, hey, 20,000 and we're collecting 1,000 in rent. What could be better? We learned real quick that banks don't like those properties. We never could refinance a property like that. And the tenant base generally wasn't as easy to deal with if it's a nicer asset. So going to move to the next slide. From us, when we're looking at commercial real estate, generally apartments, storage is, any of the commercial real estate, we're going to need to see a T12, a rent roll. If you have an OM, that's great. Summary or a pro forma of what you plan to do with the property. And then as we, move forward with the deal, we're going to need to be seeing a schedule of real estate owned or an SREO and personal financial statements. So, when we're looking at deals, generally, we need a sponsor with a net worth equal to or greater than the value of the property. That doesn't have to be one person. So if you've got a $3 million loan or a $5 million loan, and you have 3 or 4 or 5 different partners, and all of you guys together have a net worth equal to or greater than that amount, we can underwrite you all, and we can make a deal work. So just as a side note. And if anybody's got any questions, go ahead and shoot them. I saw Sean on here too. I think I know you, Sean.
If you got any questions, go ahead and raise your hand and we'll get you in order.
If you want to introduce yourself, Sean, go ahead.
I'm sorry it's kind of loud here. Hey, Jerry, how you been, brother?
Good, man. How you doing?
Good to see you again.
Are you in Miami?
I am. I'm in the Ventura Mall grabbing something to eat. I just made it to my hotel room and ran over here so I could join your group. Awesome. And grab something to eat real quick. Are you going to be there tomorrow?
I'll be there. Yep.
All right, man. I'm looking forward to seeing you.
Yeah.
So I've helped several groups so far KP their deal. If you guys are looking at a deal and you need somebody to bring experience and net worth, and you want them to get the bank comfortable, I'm more than happy to help. Love to join your KP team or your GP team and help you with planning out any value add that you have to do. I've bought and sold over 100 pieces of property. I've flipped 50 houses. I own apartment buildings outright, and I'm developing 112 units right now. I've GP'd on 176 units, so I'd love to help you guys.
Awesome.
Awesome.
Good to have you here, Sean.
Thank you.
Yeah. Thanks for doing this tonight. We appreciate it.
Yeah, for sure. I'm glad you're here, man.
John, if you could throw your information in the chat, that would be great.
I did. I threw it in there.
Okay, great.
Thank you.
Awesome.
You guys, that's a guy to connect with. Go right ahead and grab his information.
So anybody else has any questions, feel free to reach out. We're probably going to jump off of here and go get in the pool and the hot tub with the kids if we get off early. So
Go ahead.
Hey, yeah, just somebody else had posted in here. I think on one of your slides, you said something about 660 FICO score. Is that for all of the GPs or for somebody?
well, if you're doing an we're doing an agency loan through Freddie or Fannie, we're going to underwrite everybody that is on the deal. So on the GP team, if you're part of the GP team that's qualifying for the loan, if you have if you have somebody like Sean that's able to come on and just be the KP, you can do it without the credit score. But if you have multiple people that are need to be underwritten to kind of come up with that net worth, hit the net worth requirement, then yeah, everybody's gonna have to, I mean, and I will say, agency loans, they're very fluid. So if you have somebody that maybe has a $2 or $3 million net worth, and let's say they have, some of their credit cards are run up because they just did a bunch of improvements on a property, or, you never know what's going on. And we have a way to explain why maybe the credit score isn't as high. Maybe they don't do a lot of things with their credit. Maybe they pay cash for everything. That's going to hurt your credit score as well. If we can explain a reason why your credit score might be lower, like I said, they're fluid, with these deals generally, and we can make it work. But I will tell everybody that if you're looking at being on deals like this and investing in real estate, get your personal credit in order. And I wouldn't go and pay a credit repair person. I would get on YouTube and spend a little time and do some education. Do some education on just how to raise your FICO score. And bump it up as much as you can. And and if it's something that is not really able to be done, if you have some bad things on there, then you just might not be able to be part of the team that is signing on the loan. You could probably still be a part of a deal, but you just can't be a part of the team that's qualifying for the debt. So does that help?
Yeah.
Okay, good. All right.
There were some other questions on here. How is loan assumption requirement different getting a new loan?
Okay. Yeah, I don't, we're brokers, so we're not part of the loan assumption process, but I do know that I see that Sean said, yeah, they're, very,
Can I help you with that one, Jerry?
Go ahead. They're tough. I don't mess with them, but I do know that you have to qualify generally better than the guy that you're buying it from. So
yeah, you do. And not only that, I just went through this with a property. Actually, it was an agency Fannie Freddie loan. They would not allow the transfer of the property because the property had too many occupancy issues. So they shut it down. They told them they had to come back with at least 90 days, 3 months worth of financials to where the occupancy was up, and they gave them a whole list of cures. And basically they said, we're not gonna let anybody else buy this property or assume this loan until all these issues are resolved. And then they'll pick through the person who's trying to assume the loan. They'll vet them more than they did the original people, because usually these guys are trying to get rid of this stuff because they're in trouble with it. And one of the things that makes the property attractive is the fact that it's on a very, very low rate loan, and that's the reason that people are going after these properties. So yeah, it's even more involved than it was the first time.
great. Thanks, Sean.
Hopefully that answered the question.
Yeah.
Is there any more questions, guys? Come on, now it's time to raise your hand.
I have a follow-up to what Sean was saying. Follow-up question for Sean. This is Ben in Atlanta. When you say the occupancy was low, what percentage was it? Do you recall?
It's like 72, 73%. It was a deal that we looked at. It was 400 units in Memphis. And we wanted that deal really, really bad. We pulled in some heavy hitters from Pardone, and we were trying to make it happen. And they were just like, we're not letting this transfer until it gets cleaned up.
Got it. Okay. Thank you.
Yep. And just to kind of piggyback on that, with agency debt, the property needs to have a 90% or better occupancy rate. Yeah. So they only want stabilized properties. 90% or better. And, you need to see the last 3 months trailing 3 of 90% or better. So. Good, Rennie.
Hey, just got a quick question.
Yeah.
On those scenarios that you were going over, for the getting approvals and stuff like that, is that applied to like the smaller multifamily sections too, or is it just for the bigger numbers?
If your loan amount is under $1 million, it kind of everything kind of changes. So if you're going and you're buying like 1 to 4s, they're going to underwrite you based on your credit. We have lenders that'll lend in that space that are going to give loans to new investors. But as you get over that $1 million mark is kind of the cutoff I've seen. Or if you get a lot of units, if you've got more than 16 units in a property, they're going to want to see that you've got some experience managing. And like I said, it's fluid. So if you've got a guy that is buying $1 million property, maybe it's his first property, but he's got a business that he's got a $5 million net worth and a high income. He's going to have a little more leeway with the bank buying this property than somebody that is struggling to buy the property. So, like I said, it's all fluid, and and when you're looking at the smaller deals, you're going to need to put a little bit more down. If you're new and you don't have as much experience or your net worth isn't as high, but we can still get them done. So. Good, Charles.
Okay.
Yeah, so one of the deals about the occupancy rate, I've ran into a couple deals where they've bumped the physical occupancy quite well, but the economical occupancy was not high enough. And it took some real digging in to figure that one out. And then it ended up getting denied because of that. So I don't know if anyone else has ran into that problem. Can you hear me?
Yeah.
Yeah,
Jerry.
there's people can do a lot of things on paper, and you don't find out things until you dig in. So there's a lot of that kind of stuff goes on. So
Yeah. So
and that's kind of where your lender becomes a friend in a lot of these deals. I see a lot of people doing deals where they're not assuming debt, but they're doing owner financing. Where an owner might be financing a property to somebody, give me $1 million, I'll finance the other 2 or the other 3 or whatever, and I would be leery of those deals. Not because it's a bad deal. I mean, it could be a great deal, but why is the owner so willing to do owner financing? Is it because he knows the property isn't going to qualify? And if the property doesn't qualify for debt, then you're going to have a hard time selling the property when you're ready to get rid of it. So just be real leery of those types of deals. And lenders your best friend on these deals, because they're not going to let you go into a deal that you're going to get hurt on generally. So.
Yeah, you got to look at your lender as a partner in the deal. Like in this case, Jerry would help you keep from making a big mistake. So yeah, and make sure you disclose. Don't hold everything back from your lender. Make sure you disclose everything, because they're your partner in the deal.
Yep.
Yeah, always goes deal, debt, and equity.
Yep. Yeah, we had one recently that our Fannie and Freddie underwriters, like I said, found $140,000 discrepancy in taxes. The next year's taxes were going to be $140,000 more. They were listed at like 80 something, and then they were going to be 227 or something like that, $1,000 a year. And the seller's like, well, I'm gonna go back to the city and or the county or whoever it was, and try to get that tax bill lowered. And our lender, the underwriting team there, they were like, hey, we really can't do that because we know they want it to be that way. We know that that's their rates for this, for this property. That's where they're going to eventually get to. And we don't see your pro forma getting big enough to be able to qualify that, so, even if they do lower it, we're still out. So. But, or they weren't out, but just out at the amount that they were wanting to borrow. So it took like $2 million of debt off the table.
Yeah.
Anyway, I'm glad everybody showed up. Glad to see a lot of new faces on here today. And you can go ahead and move the slide. We have our contact info on here again, I believe, at the end.
Yeah, I just shared our Instagram. If you guys want to follow us, we will follow back.
Yeah. And our next topic is understanding DSCR. It'll be May 17th. So we skip a Wednesday and we'll be back. We skip a Wednesday. The Freedom Chasers will still have another Zoom on that off Wednesday. So look forward to seeing you guys again. And any of you all that are going to be at the Bring Your Deal event tomorrow, look forward to seeing you all. So.
Okay, hang on one second. Let's go over this again. I'm not sure why that is doing that. Go ahead.
Yep, and just so you guys know, another time, Sundays at 8, Monday at 2, Tuesdays at 8, and Wednesdays at 8. This is free real estate training and mentorship that I've seen people pay $40,000 and $50,000 a year for. So don't take advantage of it. Plug in and use it, and be a part of the group, guys.
Free.
Guys and girls, sorry.
All right, glad to have everybody here. Here is our contact information again. Go ahead and take a screenshot or write it down or do something with it. Jerry is been known for answering his phone with everybody, so go ahead and give him a call. He will answer your call, or he will call you back if you leave a message, but he's very good at doing that and getting back with you and getting you quotes and quotes for your deals. So go ahead and grab that information. I will give you 10 seconds if you haven't grabbed it yet. And
Hey, Jerry, also, can we connect tomorrow?
Yeah, for sure. For sure. Yeah, I don't think there's going to be a big group of people there. I think it's going to be kind of a smaller group this time. So I'm sure.
I know they've got at least 80. I bet you they'll blow it out again.
Okay, gotcha. All right, well, cool. Yep, for sure. I'll look you up when we get over there. And you've got my number here too. So send me a text and let me know where you're at in the morning.
Okay, man, I'll be there early.
Sounds good. Me too. I'll see you then, man.
Yes, sir. See you then.
awesome. Glad to have you guys. Thank you guys for joining. I appreciate everybody. We are going to go take a walk by the beach, maybe.
And we've got a couple kids. JJ here, he's usually on the calls. And Jordan in there. They've been quiet for an hour here waiting on us to get done. So we're gonna go hang out on the beach. Y'all have a good night.